Welcome in. In this video, is there a chance that Zbcn coin will increase by 1,300%? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
One of the most closely watched technical patterns in the crypto markets is the descending trend line, where the price forms lower highs over time, signaling a sustained downtrend. These descending curves often represent a bear market or correction phase, and investors typically look for a breakout above these lines as a potential reversal signal. In the chart we currently have, we can clearly see the price breaking above this long-standing descending trend line for the first time, which is a critical and positive technical development. This breakout could signal the start of a strong upward move in the days ahead. First, it's essential to analyze the descending trend line itself. This line was formed as the price continuously made lower highs, which damaged investor confidence on a psychological level. Each attempt at a rally was weaker than the last, leading to sustained selling pressure and forcing many investors to sell at a loss. However, such patterns don't last forever. Eventually, the price either forms a bottom or breaks out with volume, invalidating the downtrend. The fact that the price has now broken above this line shows that investor confidence is returning, buyers are gaining strength, and sellers are weakening. Breaking this trend line is known as a trend breakout in technical analysis, and it often marks the beginning of a bullish phase. The volume accompanying the breakout is also crucial. If this breakout happens with strong volume, it indicates that the market is not just temporarily breaching this level, but maybe moving past it for good. This attracts even more buyers. Because hundreds of thousands of investors are analyzing these charts, many will notice the breakout and rush not to miss the opportunity. Technical analysis thrives on structures that the majority sees and believes in, so the positive impact of a trendline breakout can multiply. Now let's consider the post-breakout scenario. After breaking above a descending trend line, the price will typically either perform a retest or surge upward without pause. A retest is when the price comes back down to the broken trend line to test it as support. If the price bounces from that level without falling below, it's seen as confirmation of the breakout. If we observe that the price is currently testing or has already tested that level successfully, it's an even more bullish sign. Technically, this sets the stage for a strong rally. Breaking a descending trend line is usually a signal of trend reversal. A long downtrending asset often changes direction after such a breakout. A visible increase in volume in the days or weeks following the breakout also signals that large players are taking it seriously. Big investors or institutions usually enter the market after technical breakouts, which accelerates the upward movement. This pattern is also known as a falling resistance breakout. When a falling resistance line is broken, it intensifies buying pressure. This technical formation has been observed in past Bitcoin, Ethereum, and major altcoin movements. During previous bull markets, similar breakouts led to multi-week rallies. If we're seeing a similar setup now, and the price has clearly moved above the trend line, there's a strong chance of a similar scenario unfolding. We can also estimate price targets based on this breakout. In technical analysis, when a descending channel or trend line is broken, the expected move is often the mirror image of the previous downtrend. That means if the price dropped a certain amount during the downtrend, it could rise by a similar amount after the breakout. This points to significant upward potential in the coming period. Especially during times when market sentiment turns positive, price movements can exceed expectations. Investors should analyze these kinds of breakouts carefully. They often mark the beginning of major uptrends. Breaking above the descending trend line and holding above it indicates that the downtrend has ended and a new uptrend may be starting. But patience is key during this process. Sometimes after a breakout, prices may move sideways for a while. This shouldn't discourage investors. It's often just a consolidation phase before a larger rally. It allows accumulation by larger players, which is then followed by a strong upward move. Breaking above a descending trend line is not just technically significant, it's also psychologically important. It strengthens the belief that the downtrend is over, helping restore market confidence. People begin buying again, positive news starts circulating on social media and news outlets, and this further fuels upward price momentum. Because the crypto markets are heavily driven by emotion, even one technical breakout can trigger a chain reaction of bullish activity. In summary, the breakout we're seeing on the current chart is an extremely important and bullish technical development. By moving above this trend line, the price is sending a clear message to investors: the downtrend is broken. If this breakout proves to be sustainable and the retest confirms it, we could see some impressive rallies ahead. The magnitude of this move will depend on both technical targets and market psychology. In this well-aligned scenario, the likelihood of significantly higher prices becomes very strong. Investors should monitor this period carefully and with patience. If the descending trend line has been broken and all indicators are aligned, it's highly likely that the price will initiate a strong upward move. These patterns have marked the beginning of many successful rallies in the past and should not be underestimated. This positive setup, supported by technical analysis, serves as a strong signal for investors. But we can't rely solely on the trend line for analysis, so let's take a look at the other metrics as well. Stay tuned.
The RSI, Relative Strength Index, is a powerful and commonly used technical analysis tool that helps identify overbought or oversold conditions by measuring the speed and change of price movements over a specific period. When the RSI follows a certain trend direction and forms a descending trend line, it becomes an important technical structure that investors should closely monitor. These types of trends on the RSI often provide key insights into the momentum behind price movements. If the RSI continues to move in a downward trend and hasn't broken out yet, it suggests that the price action still lacks strong momentum and that a potential reversal or strengthening has yet to begin. However, if this descending trend is broken, it could indicate that the RSI has gained upward momentum and that the price may follow suit. This type of descending RSI trend typically begins at a peak and progresses through a series of lower highs. This signals that buyers are becoming less aggressive over time, market demand is weakening, or that momentum is fading even if the price itself is rising. If the RSI fails to break through this downward trend line, investors may interpret it as a continued lack of strong buying pressure. But once the RSI breaks this descending slope, it can be seen as a sign that new buying strength has entered the market, and this could lead to a sharp price increase. The descending trend line on the RSI essentially functions as a resistance line. When the price begins to move upward, the RSI usually approaches this trend line and tests it. If it fails to break through, it often pulls back. However, if the RSI breaks above this line, it is perceived as a sign of strength, increasing expectations for an upward price move. This breakout becomes even more meaningful if it's supported by technical factors such as the price holding at support levels or avoiding new lows. RSI trendline breakouts also act as early signals for many technical analysts. Even if the price has not yet made a strong upward move, a breakout in the RSI's downward trend can serve as a leading indicator that the price may soon follow with a similar breakout. In this sense, the RSI's trendline breakout serves as an important alert for investors and presents a strategic opportunity for those looking to open new positions or add to existing ones. Furthermore, a breakout from a descending RSI trendline should not be viewed only as a short-term signal. If this trend has been in place for an extended period, especially if it occurs below the 50 level, it can also contribute positively to the longer-term trend of the price. A move above the 50 level on the RSI typically signals that the price has entered positive territory and that the upward momentum could become more sustainable. Therefore, it's not just the break of the descending RSI trendline that matters, but also whether the RSI can hold above the 50 level. When both of these factors align, the likelihood of a healthier and more sustainable price rally increases significantly. To summarize, the formation of a descending trend on the RSI and the fact that it has not yet been broken means that investors should pay close attention to this area. The RSI is currently in a critical technical zone, and the direction it takes from here will likely be key in determining the future direction of the price. If the RSI breaks above this descending trend line, it would signal a renewed market strength and the potential for the price to begin accelerating upward. For this reason, the descending trend line on the RSI should be viewed not only as a technical formation, but also as a strong indicator of the overall health of the market.
If this breakout occurs clearly on the RSI, it is highly likely that the price will react to it with an upward move. Especially if this RSI breakout is confirmed with a retest, meaning the RSI breaks the trend line, returns to test it, and then bounces upward again, it is considered a confirmation signal from a technical perspective. This gives investors a more solid foundation for their buy decisions.
The inverse head and shoulders IH&S formation is among the rare and reliable patterns in technical analysis that provides investors with a strong bullish signal. This formation indicates that a downtrend may be nearing its end and that a potential reversal could be on the horizon. Especially when this pattern forms around key support levels, it may signal the start of major buying waves, as well as a psychological recovery in the market. Currently, we are observing a clearly defined inverse head and shoulders pattern, and what makes it particularly noteworthy is that the price is forming the final shoulder. This suggests that the pattern is very close to completion, and if the price, currently hovering in this region, experiences strong buying pressure, it may break through the head level and initiate a significant upward move in line with the pattern's projected target. The inverse head and shoulders formation consists of three main components: the left shoulder, the head, and the right shoulder. The left shoulder forms when the price hits a temporary bottom during a downtrend and experiences a short-lived rebound. However, this upward move doesn't last, and the price comes under renewed selling pressure. The next dip is deeper than the first, forming the head of the pattern. At this point, the market seems to be in panic mode as the price falls below the previous low. Yet this lower dip attracts more buyers and the price starts to recover again. The following decline typically does not fall below the head's bottom and results in a higher low, forming the right shoulder. This higher low is a strong reversal signal, as it suggests that sellers are losing control and buyers are beginning to take over. For this pattern to be confirmed, the resistance known as the neckline must be broken. In the current setup, the price has reached the final stage of the pattern, the right shoulder, and a strong bullish potential can be observed from this area. The neckline is typically drawn by connecting the peaks between the left shoulder and the head, either horizontally or at a slight angle. A breakout above this line confirms the pattern and significantly increases the likelihood of the price reaching its technical target. The price target of the IH&S pattern is calculated by measuring the distance from the head to the neckline and projecting that distance upward from the breakout point. In the current case, the depth of the head region, resembling a bowl, is notably large. Based on this measurement, it's estimated that a successful breakout could result in a price increase of approximately 1,300%. This could represent a significant opportunity that investors should pay close attention to. Of course, reaching this target could take time and involve several smaller corrective waves along the way. However, the fundamental structure of the pattern supports the idea that the price may trend in this direction over the medium to long term. For investors, large formations like this often present critical strategic decision points. Volume typically begins to increase as the price moves through the right shoulder region, signaling growing buyer activity and setting the stage for a breakout. If the price breaks above the neckline with rising volume, the IH&S pattern is considered complete, offering a strong buy signal from a technical standpoint. Furthermore, if the pattern plays out as expected, the price could gain around 1,300%, representing substantial profit potential for both short-term traders and long-term investors. However, it's important to understand that these patterns are not just visual shapes on a chart, they also reflect the psychology of the market. During the formation of the head, the market experiences a period of panic, and this fear-driven sell-off creates the lowest point of the pattern. But when the price recovers from this low and begins to approach the neckline again, it shows that the selling pressure is easing and that buyers are gaining psychological dominance. The area where the right shoulder forms proves that sellers are no longer as powerful and that buyers are becoming more assertive. When combining technical and psychological analysis, it becomes clear that most of the conditions required for the IH&S pattern to succeed are already in place. Naturally, such high target patterns can be influenced by news or broader market conditions. However, from a technical perspective, the fact that the price is currently at the final shoulder area presents a valuable opportunity for investors. It's also important to note that large formations like this tend to appear only once, and the moment the pattern is completed is often a rare and hard-to-miss opportunity.
Being able to identify such formations early and plan strategies accordingly gives investors a major advantage. If the price begins to move from this final shoulder toward the neckline, rising volume and broader market support could pave the way for a strong rally. In this sense, the IH&S formation is more than just a geometric pattern, it embodies the emotions, fears, hopes, and expectations of market participants. Therefore, the successful completion of this formation indicates not only disciplined technical analysis, but also effective psychological evaluation. In conclusion, the current inverse head and shoulders formation on the chart has a very clear structure, and the current price action is situated in the right shoulder area. If the price breaks upward from this zone and surpasses the neckline, a move equal to the depth of the head region can be expected. This projected move corresponds to an increase of approximately 1,300%, which represents a highly significant investment opportunity. However, for this potential to materialize, the price must break through the neckline with strong volume and turn it into a support level. During this process, investors must remain patient, strategic, and disciplined to make the most of this opportunity. IH&S formations do not occur frequently, so recognizing them early and making well-planned decisions can open the door to major gains in the future.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments. Analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.